So what are we looking at when we're actually trading FX? Whether that be long, short, G10 pairs, emerging, developed. There's a few key things that we look at, and I want to explain that in a really short video. There's a lot of misconceptions around currency trading. A lot of people get it very, very wrong. Most people never turn a profit. So let's have a look. So one of the big things that we would look at is something called capital flight accounts. And we generally pair this with portfolio inflows, foreign holdings. That is crucial when you're building a top-down model for FX or a case study on a market that you decided to invest in. These things are really important because we're so active in the emerging market currencies, more so than G10 or developed. Then it's really important to understand something that we call perceived sentiment. And we're talking about sentiment from non-residents. That gives you a better overview or an indication of interest in the marketplace. Of course, we look at, big picture thematic themes to gauge interest, for the entire marketplace, but we're looking at perceived sentiment by non-residents. So holders of a specific currency outside of the local market. And that's really important. There are a lot of times where we look at the spread between commercial and speculative volume. This works particularly well in emerging markets. Most of emerging economies generate most of their GDP from exporting commodities. So of course we look at the link between commodity prices and net exports. If you're a net importer of commodities, then it's a little bit harder for you when commodities are more expensive. Where's that money coming from? Often it's coming from sovereign wealth funds or the country's current account. All of these kind of things affect the sentiment and the value of the currency in question. We can look at corporates, hedging, cash accounts. That even has an influence on currency price as well. And when I talk about thematic themes, what I'm saying is we often look at corporates, big corporates that are basically being pushed to accumulate, large foreign currency holdings, large foreign assets. That's generally due to having what we call a local trust, not much trust in the local currency. And when that happens, you have corporates coming in, buying big batches. That can affect value, things like this. And you look at, for the currencies, where the country in question is putting corporate capital, they're increasing local capex, things like this. All of this has a big influence on currency values, and we build headwind, tailwind, thematic-based trades around these events. We look at things like the total foreign debt relative to the country's GDP. Often you can actually trade the spread between the liquid FX savings, i.e. the current account that I was just talking about, and you can look at that in different sovereign funds, sovereign wealth funds. We incorporate credit as well. Really important to understand that the volatility around interest rate swings, all of this really affects currencies. It's got very little to do with technical analysis or patterns on a chart. For those who believe that, ultimately they never really find that edge that they've been searching for.